What's up, traders? Welcome back to another video. Today I wanted to talk to you guys about probably one of the most undervalued but most important components of trading, which is going to be this guy right up here, your trading psychology. Now, I figured this was a good time to make this video because personally I'm going through a drawdown period right now in my trading. If you're not familiar with drawdown, basically the idea of drawdown is if you take the highest point that your portfolio or your account was at, and then you look at where it is and it's currently down by some amount, whether it's from positions that you're holding that are in a loss or closing out losing positions. It's that peak to trough, if you will, from your highest point as a trader to where you currently are. So right now I'm going through a drawdown period, meaning I've had a string of losses and things have not been going super well. Now, the first thing you need to know about drawdown is that it is, of course, a very necessary and regular part of trading. We are taking risk to try and make reward, and anytime you take risk, you have to understand that sometimes that risk can go against you. Now, the psychological part is where things get really tricky because myself included, I feel like a lot of people they fall victim to their own emotions and their own frustrations with their trading, which gets them into a lot of trouble. Think about it this way: if you're sitting there and things are going poor for you in life, you have options just like anything else, right? You can choose to react positively and to find constructive ways and find solutions to those problems, or you can get really upset, get emotional, freak out, and make some stupid decisions. Well, the same thing happens in trading every day to traders around the world. There are so many people who get frustrated, they double down, they triple down, they quadruple down on their positions, or they get really upset and they just take a wild trade just to try and revenge trade. I don't know if this is any of you guys or if you've ever experienced this, but I feel like it's probably pretty relatable to a lot of traders out there. I know, myself included, I've struggled with this in the past. It is naturally going to be a frustrating thing when you are sitting here trying to make money. You're looking at the charts, you're doing all your homework, you're trying, and all you're getting met with is loss, right? Well, again, like I said at the beginning, drawdown is inevitable. It's a necessary part of trading. And so understanding that from a first degree point, like a lot of people don't even understand that, when they're newer traders, they're like, what is drawdown? I don't even understand this concept of like losing consistently and actually being okay with that. It sounds a little bit weird, right? But there is a natural level of drawdown that you should understand. You should understand that it's okay to take some number of losses. That number of losses is going to depend on your style of trading, your strategy. If you're trading with a tight stop loss, you should probably expect to have times where you take many small losses in a row, trying to capture that bigger win. If you have bigger stop losses, you should probably expect less losses in a row occasionally, but they will still inevitably happen. If you're going for something like a one-to-one risk to reward, your stop loss should be getting hit, slightly less than 50% ideally, right? But if you're trading with something that's like a 3-to-1 or a 4-to-1 reward to risk, meaning that, for every $1 that you risk, you're trying to make 4, then in that case, it's okay to take multiple losses in a row sometimes, because inevitably you only really need a couple wins to really make some serious catch up in your losses. So that's one of the biggest things that you need to understand when looking at drawdown and talking about trading psychology, is understanding what is normal in your trading performance, what is normal in terms of like a drawdown period, and understanding that drawdown itself is actually sort of just going to happen to everyone. It's more how you respond to it. Now, I should clarify that if your risk management is totally whack and you're just sitting there and you're down like 30% right now, 40% in your account, and that's something that happens to you like occasionally, or even every once in a while, that's too much, right? That sort of drawdown is the sort of thing that is irrecoverable. When you get to that 40, 50, 60, 70% drawdown, it is next to impossible to get back to all-time highs in your equity, in your balance, in your portfolio or your trading account, right? So understanding that a healthy level of drawdown is probably anywhere from 5% drawdown to, I would say, a very max of like 30%. 30% is a very steep drawdown. It doesn't sound like much, in terms of, well, I guess it does sound like a good bit, but it doesn't sound like it's 60, 70%. That's horrible, right? That's awful, because at that point you need to more than double triple your account just to get back to break even. But 30% is already pretty dang steep, and you have to ask yourself, how much risk tolerance do you have as a trader? Are you somebody who is willing to take large amounts of risk to try and make larger amounts of reward? And really think about that, because a lot of times people say, they're quick to say, oh yeah, well, because I want to make more reward. But do you really? Do you really want to see your account at some point go down 30, 40%? That is something that you have to ask yourself. And it doesn't matter how good of a trader you are, again, it's going to happen where you have strings of losses. And if you're risking large portions of your account, it doesn't take much to start seeing some serious drawdown build up. So again, just a matter of preference there when it comes to the risk. Now let's talk about a little bit of how to deal with the emotions, how to go through that process of, you're stuck in a drawdown, you're trying to figure it out, and you're trying to work your way out of that drawdown. How do you handle the emotions in the medium term, right? The short term, how do you handle just your own barriers? Well, I think it's different person to person, but the most common things that I see across like most of the people that I know who I've discussed this sort of feeling with is it's a feeling of just like frustration. It's a feeling of like, you want to make it better right then and there. And I think that the first thing to understand about drawdown is one of the most quick problems people cause for themselves, I think, is trying to immediately correct their drawdown. They're down on money and they're like, I need to get that back right now. And we know, if you've been watching the markets for a while, if you've been doing this for a while, the markets don't work like that. They don't work where you want to make a profit right now and you can go grab one. The markets, sometimes they're moving, sometimes they're not moving. I have a pound pair that I'm currently long on right now, and it's moving nicely, but it's been sitting there not really doing much for a few days. And that's the thing. If you're trying to make money today in the markets don't necessarily have to respect your desire, right? The markets don't really care about what you want. The markets do what they want to do, and us as traders, we have to be patient enough to actually get in there at the right times and find those setups, find those scenarios that make us some money. So again, number one thing, do not try and rush your way back to, out of a drawdown, because it is a quick way to really make yourself more trouble. If the volatility is not there, if the movements aren't happening, you can't force them to happen just by taking a big position and trying to go all in. It's probably one of the most dangerous things that traders do is, again, they get stuck in a drawdown, they're like, I want to fix this right now, and so they jump to conclusions, they jump all into a position and try and make a lot of money in the short term. So don't do that. The next thing is probably, a drawdown is like, it is literally like it's just like a short dip in a long-term uptrend if you have a good plan and you trust your plan. So I would encourage you, if you don't trust your plan, if you don't have like any sort of confidence in what you're doing, you should definitely stop trading a live account, and you should probably go back test, play with a demo account, and feel more confident before you do it. You need to understand, like, logistically, this is a normal drawdown, and then usually over time it should pick back up and get back on the horse, if you will, and keep riding. So that's the concept, is looking for ways to correct your drawdown, but not immediately. Don't try and rush your process. Try and continue to stick to the plan, and even though you're in a drawdown, even though things are down for now, understand that you can work your way out, but just don't rush it. Look for the setups, be patient enough to find them, and if you stick to the plan and your plan is good, you should be able to work yourself out of a drawdown in theory. So that's what I've got for you guys today. When talking about drawdown, it's a very tough subject. It's a very tough thing psychologically. I think one more thing I do want to add is for times when things are going well. When things are going very well in trading, there's also a psychological struggle for people as well. Most people think of the psychology of trading being only important when you're talking about, correcting losing situations or when you're losing money. But there's a lot of times where people really mess things up when they're actually making money too. If you're in a situation right now or in the past, you may have noticed that when you're up a good bit of money, when you're doing well, when your trades are working out and your strategy is playing out nicely, then you have to actually find ways to not destroy that, because sometimes people get caught up and they actually they cause for themselves more issues when they're making money than when they're not. What do I mean by that? Well, they might get greedy, they might triple down their positions, they might try to add to things aggressively or deviate from their plan because they think they're sort of invincible. Will and I have talked about this in the past, in a past video, talking about how it's very, very easy to feel overconfident and invincible when things are going really well in your trading. And so I want to say, if you feel that way, step away. And one of my favorite tips, one of my favorite ways to approach the invincible feeling is to reduce my position size for the next few trades until I experience a loss, which is kind of a weird one because you know, if you're doing well in the markets, the idea would be, you know, keep doing what you're doing. I understand that, but at the same time, because we are human beings, because we have emotion, it's very easy to feel that overconfidence and to make it seem like, you know, you can't lose a trade, so you start piling on bigger positions and deviating from your risk management plan, deviating from your strategy, you know, picking out trades that aren't really there. It's very easy to go off the tracks. So what I would say, how I like to approach it is I take a smaller position size on a trade until I take a loss, right? And that just sobers me up a little bit. It's a little bit of a weird concept, but I purposely take smaller positions until I take a loss so that I can remember, oh yeah, I'm not always right. You know, I'm not invincible in these markets. These markets can definitely humble me, right? So those are some tips on the trading psychology side of things. I hope that helps. Julie told me I need to make a video about trading psychology because it's been a minute, so I hope you guys enjoyed. If you made it to the end of the video, make sure to smash that like button and subscribe to the channel for more content. And let me know that you made it to the end of the video just by commenting it down below, and I would really appreciate it. I'll try and heart your comment. Thanks so much, guys, for watching. Have a great rest of your day. We'll see you back next time. Hey guys, thanks so much for watching this video. If you enjoyed it, please remember to like the video down below, because if you don't, you're statistically 84.72% more likely to blow an account in the next 48 hours. Don't ask me how, don't ask me why, that's just facts. If you enjoyed that video and you want to see more free content here on YouTube, I'll be popping up some videos on the screen now. Go ahead and click anything that looks interesting to you, and thank you so much for supporting the channel.